Welcome to Economist.com. Today we're speaking with Pam Woodall, the Economist's Asian economics editor, the author of the Economist News Survey on the World Economy. I'm Megan McArdle, Global Agenda Correspondent for Economist.com. Pam, what was the most surprising thing that you found while doing this survey?
I guess it's the influence that the emerging economies are having on the developed world. Last year, for the first time in modern history, the combined output of the emerging economies rose above half of total world output. And then if you look at other measures like emerging economies account for half of the world's energy consumption. So there's lots of big figures like that. But what's fascinating is the way that those sorts of factors are now driving world growth, world inflation, world interest rates, wages, profits, oil prices, and even house prices are all now being influenced by China, India, and other developing economies.
Can you talk a little bit about that last? It's not surprising that Chinese demand is pushing up the price of oil, but how do they push up the price of houses?
Well, this is slightly indirect, but as you know, China and other emerging economies, through their increased production and lower wages, they're helping to hold down inflation in rich countries. And as a result of this, central banks have been able to hold interest rates lower than they otherwise would. In order to meet their inflation goals, they can meet them with lower interest rates than they would have had to set in the past. Those lower interest rates have actually fueled housing bubbles, I would call them, in a lot of countries around the globe.
What's your take on the argument that China is now fueling immense instability in things like interest rates in the United States? Is that a function of government policy or just a function of the fact that they're growing so darn fast?
I don't think they're causing instability in interest rate in the U.S. If anything, in recent years, they've allowed the United States to hold interest rates lower than they have been historically. And indeed, even now, in most economies, real interest rates are much lower than the historical average. What's strange is what you would have expected to happen with the entry of China and the other emerging economies into the global system of production. You would have actually expected this to push up real interest rates because China's coming into the world with lots of labor but not much capital. This would push up the return on capital, which should, in theory, push up real interest rates. So we have this sort of paradox that real interest rates should have been higher. Actually, they've ended up being much lower.
How worried should we be about the state of the world economy right now?
I guess you're focusing on the U.S. economy here. And if we're talking about what happens if house prices start to fall, which I think is very likely to happen, then I think for the U.S. economy, that's bad news. However, when one looks at the world economy, I know people say, the whole world is dependent on the U.S. consumer. But actually, I think that the emerging economies are showing more ability to sustain their own growth. And their growth hasn't been all on the back of the U.S. economy. And some of the figures in my survey are staggering. In the past 5 years, emerging economies have grown by an average of 7% a year. That's the fastest pace ever in recorded history, and about 3 times as fast as in the rich economies. And a lot of that growth hasn't come just by exporting cheap goods to America. There's a lot of exciting things going on within the emerging economies themselves. So because of that, I think it's possible that the U.S. economy could stumble, but most of the rest of the world, although it will grow a bit slower, they don't need to be pulled down by America.
So we should ignore the doom and gloom camp who says that the sky is about to fall as soon as U.S. housing prices do?
The sky is certainly going to fall so far as the U.S. economy is concerned. I think the U.S. economy either is going to face a recession or several years of well below trend growth. And obviously this will mean slower global growth, but it doesn't actually need to mean a recession in the rest of the world. I mean, this is sort of, one of the big things to come out of my survey, the importance of the emerging economies, the contribution that they're making to global growth.
Can you talk a little bit about Europe and Japan? Because a lot of the time when you hear about these global imbalances, it's in the context of some organization lambasting Europe and Japan for not pulling their weight in terms of generating demand for emerging market imports.
In one part of the survey, I actually look at, among the developed economies, who's going to gain most from emerging economies and the faster growth in those economies. And the conventional wisdom is that the United States, with its flexible markets, more dynamic companies, they will be the ones that cope best with faster growth in the emerging economies and also gain most from it. But actually in my survey I conclude that so far there's little evidence of that. If you look at exports, one of the great things about the emerging economies, they don't just export cheap goods to rich countries, they also import a lot of goods from rich countries. America's exports to emerging economies are only about 2% of its GDP. In Germany, its exports to emerging economies is about 8% of GDP and has been rising much faster. Likewise, Japan has seen much faster growth in exports to emerging economies. They seem to be positioning themselves rather better.
In closing, was there anything that was interesting that didn't make it into the survey that had to be cut for space?
No, because I wouldn't have cut it if it was that interesting. I mean, I think one thing we haven't talked about, which I think again it shows the importance of the emerging economies, is I'm on the one hand arguing that the integration of China, India, and other emerging economies into the global economy is giving the biggest economic boost in world history. I'm actually saying this is going to be bigger than the Industrial Revolution. And to give you an idea I found a fascinating figure there, is that since the year 2000, global GDP per head has grown by 3.2% a year on average, mainly thanks to the emerging economies. That is faster than not just the post-war period, 1950 to 1973, a sort of so-called golden age, but that's much faster than during the Industrial Revolution. I mean, in other words, the first decade of the 21st century could see the fastest growth ever in average world incomes. And then the other aspect I'd like to sort of stress is that the reason why so many surprising things seem to be going on in the world economy is because we haven't been attaching enough weight in our economic models to emerging economies. So, for example, why are profits at a record high as a percentage of GDP? Why are wages at a record low? Why are interest rates so low? Why is inflation low despite high oil prices? All of these can in some way be explained by the bigger role of emerging economies.
Well, thank you very much for speaking with us today. You've been listening to Pam Woodall, the Economist Asian Economics Editor, speak about her new survey on the world economy. My name is Megan McArdle, and I'd like to thank Pam for speaking with us and thank all of you for listening in. This survey and others can be found at www.economist.com/surveys.